Hi everyone, I'm Abiodun Agbola, Head Derivatives Market Group here at FMDQ Securities Exchange Limited. Welcome to the first episode of Q Dialogue. I'm a financial market enthusiast, and Q Dialogue offers me the unique platform and opportunity to have conversations with my colleagues and experts in the Nigerian financial market regarding an area of finance that is particularly dear to my heart: financial derivatives. In different episodes, we explore topics such as what derivatives are, types of derivatives products and how they are used, risk management in derivatives market and the role of a central counterparty, and how derivatives can be used to stimulate economic growth and market activities. Today, however, will be a blast from the past with Mr. Bola Onodele, or Coco as is popularly referred to in the market. His experience will be a much needed brush and ink to paint a background that is required for subsequent conversations that we would have on Q Dialogue. Coco is the pioneer CEO of FMDQ Group PLC, a financial market infrastructure group with exchange, central counterparty, depository, and private market businesses. Prior to his engagement here with us at FMDQ, he was the president of FDHL, a financial market and risk management consulting firm, where he provided leadership towards the empowerment of Nigerian financial markets. Before then, he served in senior executive roles in different banks in Nigeria. As a well-regarded financial market architect, he serves on the boards of several organizations. Welcome to Q Dialogue, Coco.
Thank you very much, Belden.
Yeah. So I think we just delve right into history, to be honest. You were one of the first persons I heard speak so passionately about derivatives market, especially in Nigeria. So I'm curious to know what informed your, what I would say, acute interest in derivatives. Why do you love them so much?
Thank you. I joined Citibank as a rookie trader in 1991. And it was a time in Nigeria that the foreign exchange market was quite active. You can say volatile.
All right.
And clients of the bank sort of desired certainty to, of course, the business. This was a major factor in their business. And Citibank that I joined had been offering FX forwards in the market. And, I would track those forward rates compared to the spot market when the customers transacted them, and then the rates at maturity. And I fell in love with that sort of product that could turn risk to certainty. And my, of course, interest in solving clients' problems, because clients will come and have meetings with me and explain what their issues were, what they wanted to do. And it was a major connection. Me being a rookie, having opportunity to solve, and clients will come back at times to offer gratitude for the forwards that they bought from the bank. And that was really where it started. It was a very powerful product.
I can certainly relate to that. I chuckled when you said 1991 because I'm a 90s baby. So you have been doing this derivatives thing since I was born. Oh, fantastic. The second question I would like to ask is very similar. Were FX forwards the only derivatives products in the market at the time? And the reason I say so is this. I would not particularly use the word stable to describe interest rate environments in Nigeria, for example. I remember 2019 where rates crashed significantly, sometime between October and December. So were interest rates a lot more stable at the time, or they were almost as volatile, and were there products that were offered to clients also at the time?
Thank you. The interest rates were not stable.
Okay.
They were volatile, but just like this Nigerian markets, the corporate treasurers seem to absorb
the risk.
The risk better. The investors lived with it. The borrowers lived with it. But the FX was quite sensational. And nothing has changed if you look at the market today.
Yeah.
It's still the same way, but maybe with the pension managers and the pension funds, there'll be more connection in Nigeria to interest rate or yields and things like that. But it was mostly about FX then. One, the availability of it, and two, the uncertainty around the rates. if you look at or think through what I just said, looks like nothing has changed since 1991. Yeah. So interest rates were not stable. They were quite active as well. But nobody thought about hedging the interest rates. Interestingly. But after a while, I was from the FX desk. I was moved to the
interest
Naira
rate there.
desk.
Oh, okay.
And you can imagine my frustrations when I had a portfolio to manage. And I'll think interest rates might drop. Most times they would drop because I was a trader and the hunch was there. And I could do nothing about it. And I was meant to be managing the assets and liabilities of the bank. And those frustrations led me to thinking. And I went to see my boss and I said, look, we offered FX forwards to clients. Now I have a balance sheet to manage. And I'm frustrated that we do not have products in the market to address and to help manage the balance sheet of the bank. Yeah, bear in mind, lenders had the same issues. It was just, from the FS desk, I was just dealing and solving clients' problems. With this one, I had the problem as well. The clients,
Had the problem.
had the
but you
problem,
also
but I
had
had the problem managing the bank's balance sheet. And my boss, Jibril Aku, said, well, if it's not there, then go create it.
Oh, wow. Okay. So how did you go about creating it, if I must say?
Interesting. I think, unlike foreign exchange, you bought it and you could offer forwards. This was now the bank's balance sheet. We had the assets, Naira, loans and co, and investments we made. We had the liabilities on the other side, deposits we took. So who was I going to transact the forwards with? The other one, the FX, we were selling to clients.
But now you are the one in need. So who sells to you?
So who sells to Citibank? So
Interesting.
I got to read, and I stepped on LIBOR.
Okay.
And it was a way where you could have interest rate fixing that would be credible. It wasn't determined by the parties in a way. Because I ranked some of the big clients that made deposits with us, Shell Trustees, Mobil, now Exxon Mobil. And I'm like, look, I need to have some certainty around the risk. And they're like, okay, so which rate? How do we know where the rates are? And things like that. So I read LIBOR, and I saw British Bankers Association. This LIBOR was then distributed by Thomson Reuters for the British Bankers Association. So I went to my boss's office again and I said, oh, this is what I've read so far. We need to create something similar to LIBOR. And he went, create it. So, yeah. So that's Mr. Aku for you.
So if I understand you correctly, there was a challenge. You were exposed clearly to interest rate risk, the volatility on your balance sheet. You wanted to create a derivatives product to hedge that, but you could not do that without some form of underlying, a benchmark, a LIBOR type of instrument. Maybe I should just ask, now that you have mentioned LIBOR, NIBOR seemed to be coming to mind. Was that how NIBOR was bettered?
Exactly.
Oh, okay.
That was what happened. So that work started probably from 1995. I saw British Bankers Association. I had the opportunity of going to London for vacation, and I went straight looking for that office. I'm not sure we had web or internet and all these things there. So I actually looked for the office on Old Broad Street, went to their office and asked to see anyone that could explain this to me. And I said, I'd like to do something similar in my country. Can I have your brochure or documents on how this was created? And they went, oh, this was created in 18 something. Long ago. No one had document, but we can talk to you. And I may not remember the names very well, William Mason and, one other gentleman sat with me. And they said, well, we'll talk to you, then you have document that you can share with other countries. And I spent some hours with them, and they're wonderful people. From that, my journey to learning the London financial market started. I came back to Lagos, of course, spoke to my supervisor, Jibril.
Okay.
And it was obvious that we needed to work with other players in the market. Unlike FX Forward, where we sold to our own clients. How do you build a fixing like that without the platform, a credible platform? We were lucky Money Market Association existed in the ecosystem.
Oh, that is now FMD, right?
It's now the Financial Markets Dealers Association.
Okay.
Around that time as well, I'd gone to Citibank, New York, and I'd been advised that if I was going to be an agent of change, I needed a platform and I needed media to sort of communicate, widely so people can buy into what. So the platform side was easier to handle, and that was Money Market Association. So I came back. We had a presentation to the market on
Money Market Association's platform.
To say this sort of a thing has to exist. Guys, we all have these problems, asset and liability management. You need products to actually manage them. I mean, you can't just say, oh, we think interest rates will rise. Let's go and book loans for 1 year. If the corporate treasurer doesn't want to go that long, what do you do?
To hedge.
So you had to hedge. We had to think of this instrument. But it was an interesting market. I'm talking of 1995, 96. That idea caused a problem. Some bankers did not want it because rates were not going to be transparent. Something has to be published that will indicate to everybody in the market
where rates are.
So
you can't cheat your clients anymore.
You can't cheat clients anymore. You got it. And it was a major issue that they actually reported to the central bank that something like this was going to happen. And Mr. Omoeke was the director of banking operations then and invited us to come and explain what we wanted to bring to the bank.
So by us now, is it Citibank or Money Market Association of Nigeria?
Money Market Association, but by then I was the one put forward to go make the explanation, of course, because even within the Money Market Association itself, some people didn't want it.
Divided.
So the house was divided, and I went to explain to Mr. Moike and his colleagues what this was about. And he asked his colleagues, what is the problem with this? Markets we know, clients we know, where interest rates were, people will be able to negotiate, and this will be the beginning of hedging products for asset and liability management for everyone, depending on which side you stood. But a bank always had the two sides.
Yeah.
And that was what saved NIBOR. But we had the central bank always, is a house of wisdom, then said, okay, let us put there that these rates apply, since they were interbank rates, to amounts from 100 million naira and above. I think that was what we introduced. And that was what did it. And NIBOR was published for the first time April 6th, must be about 25 years now, maybe 1998 or something.
Okay. I was probably in primary school, but that's fine.
And NIBOR got published. But it was a lot of work with British Bankers Association. I didn't go there once. Faxes. We had this thing called faxes then.
In place of emails.
Yeah, so I'll write as to the procedure, how things will be done, fax to William, then he will return, make adjustments with my boss, then he will take it to the association because it was important to make it the product of the association.
So thank you very much. I haven't established the underlying, so to speak, the NIBOR interest rate benchmark. So which product or what products did we now develop, derivatives products, to actually hedge interest rate risk in the markets?
Yeah, so thank you. So NIBOR was done. The next step was proof of concept.
Exactly.
So now we have this fixing published every day, probably in this day. And then, banks shared with clients if they wanted to. Some tried to keep under wrap. So, and some bankers would call me at times and say, see the problem. A client came to our office asking for interbank rate, and we said, we just get it. But the question you just asked me was also asked internally. Okay, Coco, NIBOR is in the market. So
what next?
What next? I was still living with my frustration, of course, because at times my books were not in the greatest shape. So it was to have the first product on it and forward rate agreement, FRA. And I used to spend time with other colleagues in, I think on Kingsway Road, you have Golden Gates. That was where we used for a lot of financial markets education. I'll prepare slides.
Oh, okay. Sounded
And
like
because I needed to carry along my colleagues on this journey, and I was always at a point in time making presentations on the different products to use to create certainty from the risk. And FRA was one, and a close pal of mine, we're still friends today, Nira Aderogba.
Okay.
I worked as treasurer of Merchant Banking Corporation. And it was the
NBC.
first to NBC, and it was the first to say, do you know what, let us have a FRA transaction. And, sizable amount, and see it settle on the NIBOR, and we can start learning more how to work, how to hedge. To have that sort of derivative product for the first time in a bank involved, the senior signing off.
Yeah, I can imagine.
The CEO signing off, because
extensive legal agreements.
Yeah, we had agreements. Legal went through the agreements, and we're going to transact and agree on this product, and it will settle. And if it went against the bank, we had to pay and stuff like that. And I had to make presentations internally to the seniors and to the CEO, and it had to make sense to them. And of course, solving mathematics. How do you get the forward rate to use and all that stuff?
Settlement amount.
Happen settlement amount, to explain it, internal control, everybody. I was nervous, of course, because at that point, if the CEO said no, that would be a no. And at the point the CEO disagreed with the equation I was solving, and summing raised to power, this and that, and I was on the floor pulling it, and guys were like, step it down. But I wasn't going to step it down, because it would have affected my conclusion and presentation. And all of a sudden, the CEO just said, "Oh, I got it, Coco. You're right. That raised to power 3, when it crosses on that side, now be,
1 over 3. Something
yeah,
like
do
that.
something about 3, and brilliant, fine. Any question, anybody?" And it was like, approved. Let's go. You could have felt the relief in the room. Everyone was relieved, because I've been working on this for months as well, and I was grateful. Thanked my supervisor, called the other bank. How are you doing? Exchange legal, and we had the first interest rate derivative in the country.
I'm curious. I am aware that derivatives is a zero-sum game, and this was a game between you and your friend. Yeah, you're hedging the bank's balance. Who lost? Who won? Can you remember?
I will say I lost, but it was what was important was the mark to market, understanding what happened every day to the books. When I talk about products with people, I tell them, give me the accounting side of things. Very important, because you must know what to do. And I had to prepare all those things, because they had to post them in treasury operations.
Yeah.
There were no margins, so every day the bank had to value that contract and decide what to
Also,
buy.
you were doing the daily valuation. Something cleared us.
The treasury operations had to do it. It had to be independent of me, of course.
Okay.
But it was just the journey, carrying everyone along, internal stakeholders, external. But we made it known. We made a song and dance of it, that the first interest rate derivative had taken place, shared with clients in the market.
Yeah.
And I guess that sort of, encouraged other people to start looking at what to do and probably move on with a lot of other products.
I see. I'm aware that banks today still do FRAs between themselves. It's very interesting to see how it all started. So I would like to take you back just a little bit. I mean, after publishing NIBOR, did you, alongside Money Market Association of Nigeria at the time, work on other benchmarks, not just interest rate now? Where NIFEX, for example, I would like to. I know it no longer operates. We moved to NIFEX, but I think it was also back then. Is there any backstory to NIFEX, or we just launched NIBOR and then moved straight to NIFEX?
We did NIBOR. We executed the FRAs, and we then saw that we could have the FRAs on the FX desk called NDFs.
Okay.
Because this was
non-deliverable.
Without you don't have to deliver the principals, and it was great. So, I mean, Money Market Association then was wonderful. It was an intellectual house. So, again, we gathered and we were like, now that we've done France, let's do NDFs. Again, we had to put heads together, Tosin Rushewe and others that I may not be able to remember now, Funsho Shobande, decided to put NIFEX together. Now, at that time, the president was Lao Ejayola, who used to be a director in FMDQ, was the president of FMDA, and he loved market development. And it was all about market development in those days. And we did NIFEX probably in 2000. And then, what we like doing, proof of concept. Let us have people execute non-deliverable forward using this fixing to settle, because that meant that fixing has to be credible. You don't want market to be, I can't remember what it was in 2000, maybe 100 naira to $1, and then the fixing is showing 105. But the markets were active then. So it was very easy for the banks that were contributing to be able to give you the quote which went to the secretariat. And the secretariat was in charge of publishing, doing the fixings work, and then publishing. And then we did NDF and saw the advantages of NDFs. And those were the things we occupied our minds with in those days. Market development, because we're interested. I'll travel and come back and I'll share with people, those doing these things outside. They're probably much younger than us. And I didn't see anyone with two heads. So I used to encourage my colleagues that we needed to do this thing for Nigeria and for Africa.
Okay. Thank you very much. Sorry to bother you about this, but I would like to learn a little bit more about those your trips. I mean, the Old Broad Street. Was he on one of those trips? Because I asked you when we started about your passion for derivatives. What I did not ask is, when did you start thinking about creating a derivatives exchange, which I believe is something FMD Securities Exchange would do a lot more in the future. So, I mean, derivatives, yeah, quite all right. But the idea of derivatives exchange, where did it come from? How did it start?
I think it was when I met British Bankers Association, those executives, because they also introduced me to so many other people in London, you see. Because I'll ask questions. I was reading. Then I'll ask questions. And they'll be like, it's like someone come here and say, oh, I want to meet FMDA. And you go there and say you want to know about derivatives. And they say, okay, go and see Biodun Agbola in, FMDQ. And then you're explaining to the person and you mention central counterparty. And say, what's that? Oh, London Clearing House. Can I meet? So this was how I was, sort of moving from different streets, areas in London. My vacation then was all about learning about financial markets. We didn't have internet then, so if they were giving me any book, I had to photocopy things, I had to photocopy materials, and I was shipping all these things back home, distributing widely. Then I was introduced to LIFE, London International Financial Futures and Options Exchange. They had created this market from scratch. And this gentleman introduced me, and I went to Cannon Street, and I walked in. Then we didn't have 9/11, so most of these exchanges you could stroll and watch, just sit at the gallery and watch. And I was there, and it was amazing, and it was about hedging, interest rate, foreign exchange, commodities, whatever, indexes. And that visit to LIFE changed my life, I'm telling you. And that was when I now understood a different level of derivatives, the exchange-traded derivatives. Usual character, where are books to read, And they went, maybe the second day I visited, they had a library. They gave me the books to read, and I'd imported a lot of those books into the country, sharing with my colleagues. And I'll get to that. Then I signed up to get trained, in LIFE, and that was where I met the head of education in LIFE, Paul North.
Okay, I was going to ask you about Paul North.
Yeah, and Paul North, we had brought him to Nigeria, to also do the education. He was a wonderful teacher.
So tell me about Paul North. You mentioned about live trading floor and how chaotic it can be. I remember Paul North talking about it when he came here for one of those trainings. So please tell me about.
Yeah, thank you. The way life operated it, every day Paul North trained people. Corporate treasurers will register. You have to be registered. They put your name. You make a phone call, and he trained clients of banks and the dealers on derivatives, on the different products, so people could understand it. And I believe FMDQ has set up FMDQ Academy, and it's the same thing. When you go live on these products, people have to come to FMDQ, you invite them over, and someone is doing training every day, explaining the products, because we want people to understand the products. And that was the role Paul North played for life. And I'd written his name down, I'd exchanged cards with him. I was always in his class. Anytime I was in London, I'll be in the class. If you went on vacation with me that time, it was all about, there was no other thing but financial markets. Seriously. Meetings there or going to the clearinghouse, asking how things are done. I just wanted to understand it. And Paul and I'm sure I would have been an irritating Nigerian who was always, because they would also ask me, what is in your country, how are things? And when I tell them about the lack of anything, they wondered what exactly I was talking about. But I kept telling them that this thing was going to happen in my country. I promised them that. And I think somewhere years after, I went back looking for Paul North, and I told him my country was ready. But some things happened before then. The Money Market Association had another president, Gabriel Edgar, and I told him we needed to start talking about financial futures. These things don't happen overnight, so you have to start laying the building blocks over a long period. So we formed the Financial Futures Committee, and I had colleagues there, Mustafa Ibrahim of First Bank, who's now in Dangote as the CFO, Funsho Shobande, probably Tosin Rushewe served. I chaired the committee, and the first thing I did was to give them the book on life. Life has a book, a market and its makers.
I have a copy. You bought me a copy.
Yeah,
I'm still reading it, by the way.
Yeah. And each time, I don't know how much has been spent buying those books and bringing to Nigeria and sharing with colleagues to read. Some do, some don't.
I'm reading mine.
But I must have read mine more than 20 times because they documented everything they did and the key success factors. So that committee went through that, and I think the outcome was a paper we presented to the association, a justification for financial futures. And, that was submitted as an output of the work done by a committee. And then we had an implementation plan on what we should be doing. Country was changing, of course, education going on, and but something doesn't change, and that's the volatility of the financial markets. Rates will always move up and down. You're looking for what can be used to streamline your income flows. Is this hedging products, derivatives? And then I must have published an article in 2005. Which is again
the casino.
Yeah. It features market, a rational market or a casino.
Okay.
Because we'll have debates and people felt derivatives was just driven by speculation and things like that. But I needed to release it to the banking sector for all of us to appreciate the fact that you cannot have asset liability management in the true sense of it without derivative products. It may take people time to understand, but someday, sometime, somehow, this market and people coming after us would appreciate the work being done today. Because it will be the only way for them to manage their books. If you think interest rates will drop and you're an investor, and people have pensions that are being managed by pension fund administrators, if yields are going to drop, and as you said earlier, they did drop, drastically some years ago. Imagine if your own pension manager had read it and had done some executed futures transactions. So whilst others were getting 4%, they were getting 15%. That is the sort of competitive edge that derivatives may create. And any house that is not getting its people educated or is not investing in this now may suffer in future.
Okay, thank you very much. Just to put this in perspective now, I mean, I know we talked about using derivatives to hedge asset liability management, and this is something we'll discuss in greater detail in subsequent episodes.